we will get underway. So I'm going to pause for just a moment for the editing purposes. Welcome to the Desert Blockchain monthly session on real estate and blockchain. We have an awesome panel presentation tonight, and I'm going to stop the screen share so some of us, so we can see one another. And there we go. Great. All right, excellent. So tonight we're going to take about an hour and we're going to talk about real estate and blockchain, and we're going to look at some actual projects that have actually been in operation. And we're going to talk about some other possibilities in the general realm of identifiers that are related to real estate and blockchain. And then we're going to talk about, and if everybody could mute while you're watching and then unmute when you'd like to talk, I'd appreciate it. But then we're going to talk about some real life opportunities for funding research in blockchain and real estate projects, and forming some teams and some opportunities for you to get together with others in the community and apply for, basically there's actually 3 million available for blockchain that's been in matching funds that's been allocated by the Arizona State Legislature. We'll talk a little bit about that. And then I'll announce some opportunities to have follow-up sessions where we can continue to pursue this conversation. So I'm Jay Carpenter, the founder of Desert Blockchain, and I do appreciate everybody that's on Zoom that are Desert Blockchain citizens. This is completely community funded via Patreon, and we don't take any sponsorships, and this is part of our theme of decentralization. So with that introduction, are there any questions before I turn it over to Yael?
All right.
Okay, great. So I'm delighted to introduce Yael TAMAR, and she deserves a Super Bowl star today because it's like 3 in the morning or 4 in the morning where she's at in Hungary. So I really appreciate you joining us, and please tell us a little bit more about yourself, about your projects, and about the St. Regis, please.
Well, thank you for that intro, Jay. I appreciate it. It is indeed 4 a.m. in Hungary. I think I might deserve another star because I'm COVID positive, but it's I think it's just a part of it right now. It's not like nobody can escape it. So, but guys, I am delighted to be here. I'm Yael TAMAR, co-CEO, co-founder of Solidblock. We were the technical team behind the Aspen Coin, and I want to share with you today like a quick presentation on what was the reasoning or the purpose behind this project initially, how it came about, who were the partners on the deal, and answer any questions. So the Aspen Coin. The Aspen Coin project was a raise of $18 million, which resulted initially in a 28% token upside. So in mid-2018, Solidblock was one of the first tokenization, real estate tokenization companies. There's not a lot of companies out there at that time. So we got approached by Elevated Returns to essentially create a smart contract and to create a landing page through which investors could go and invest in this project. Elevated Returns is a New York-based asset management company, that services hospitality, real estate, and consumer brand industries. So the initial thinking behind the St. Regis offering was actually a filing to do an IPO. So initially, Elevated Returns had a plan to do an IPO. However, after having some work done on it, they realized it was going to cost them over $2 million to do an IPO and then do reporting afterwards that would significantly increase their costs as well and change the way they operate. So they were bullish on this industry. The founders of Elevated Returns are also deep in the blockchain and crypto industry. So they were looking to create a consortium of partners who would, number one, bring some capital, and number two, provide the technical expertise necessary to execute. The objective was to raise capital to maximize revenue. At that point, they wanted to increase occupancy rate in a hotel. Also, they wanted to add renovations to the hotel with the goal, I guess, to increase the occupancy, to do some food on board changes in the hotel, and put some money to marketing and branding and so on. So that was basically the goals for the raised capital, according to the PPM, private placement memorandum, that was written. Now, in general, the main reason for raising $18 million, which was 20% of the equity, was really recapitalization. So to replace some of the existing investors and allow them to exit before the official sale of the hotel. And that's probably the best use case for blockchain, for blockchain-based digital securities. So the partners here on the deal were Elevated Returns. They brought in Indiegogo's fund called Microventures to fundraise, brought Templum to do the compliance. So KYC AML accreditation was done through the Templum system, and Solid Block did the smart contract. So essentially, we did the first smart contract in the industry for real estate at the time. So the smart contract that we did was an ERC-20 contract. So we also did a landing page for the project where investors would go in and register, and then go into the Templum system to pass through all the compliance procedures. Now, in terms of the project itself, it's a trophy asset, very well known, 179 units. At the time, the appraisal value was 224 million. It was mortgaged by JP Morgan of 130, equity of 94, NOI 13.2 million. The reason why $18 million was chosen for the value of the STO was essentially driven by JP Morgan. They were comfortable with just 20% of the equity tokenized at that time. Since then, the banking industry has greatly improved their understanding of the STO process, and normally they do not impose any restrictions. So we've been in touch with many banks since then, and they mainly want to understand the AML procedure of platforms like Solid Block to make sure that they don't come into any AML exposure, but they don't have major issue with syndication and not knowing which investors are holding the equity in the project. So basically, as I mentioned, Elevated Returns engaged us to do the security token programming. So we worked with the overall team in the project, which included Clifford Chance law firm that basically drove the PPM writing upon which we basically based the smart contract. So this was an interesting use case because basically it was the first in the world and the first in the industry, right? So Just a general recap of why digital security offering is better, and what was marketed to investors at the time and still marketed to investors, is that the overall management by the investors is much better and much easier for digital certificates as opposed to paper certificates. Investors have much lower liquidity risk, and that was actually the best use case for that with a recap deal. There was an exit strategy right away, right? So they promised to put the project on an exchange within 12 to 18 months. It ended up being, I think, very close to 18 months when the project was actually put on an exchange, and it was mainly due to COVID, but then the elevated returns were pushed by their investors to actually put the project on T0, which they did. And the most interesting fact, I guess, about this project is actually, I'm going to skip through a few slides here. So the most interesting, sorry, the smart contract was actually audited by two firms at the time, both Ernst & Young and KPMG, and we worked with both of them to get feedback and incorporate that into the smart contract. And I'm looking here, yeah, this is the slide I was looking for. The most interesting part about this project is that initially there were 22 investors on the deal. $7 or $8 million was actually brought in by existing investors. So existing investors brought more money to kind of buy out investors who wanted out. And then another 8 million was brought mainly by microventures. Well, microventures brought about 2.7 million, if I'm not mistaken. And then the rest was brought by elevated returns and their partners in Hong Kong and in the United States. And there were 22 investors in the deal. Some of them were actually funds and represented a number of investors. So it's like almost a syndication within syndication. And the range of investment was between $10,000 and 2.7 or 2.8 million for yeah, for their whole.
I am sorry, I forgot to start the recording, which is
it's live though, so
it is live, but by recording I can create a podcast. So
okay.
So sorry to interrupt you. This is awesome.
It's okay. Do you want me to start over?
No, go ahead. Just continue.
Okay, no problem. Okay, so initially there were 22 buyers in the deal, investors in the deal, and after it was listed, immediately went up to 200 on T0. T0 is an exchange, is one of the few ATSs that have a digital trading license, and T0 listed the project. Actually, Tezos got involved in the project as well at that point, and I believe that they redid the smart contract that we initially issued. And then there's a lot of blockchain play here, and so anyway, so right now it's listed on T0. There are over 1,000 investors in the deal right now, a year later. And the price initially when it was issued was at 128. At some point it was actually 131, 132. It peaked at a certain price. And then now, actually, I just looked it up. It's at 1.1. So it went down to what it initially got issued at. And if you look at ASPD, that's the name of the token. If you Google ASPD pricing, then it will give us like the value, right? So we have like a 52-week high of 133 and a 52-week low at 95. At some point, it seems like it went down to 95, right? So, and you can also see it on Yahoo Finance. You can you see it on on Market Watch, right? So they're basically treating it here as a public, essentially as a public stock, right? Even though it's traded on an ATS. So I guess that's pretty much all I wanted to share with you guys today. If you have any questions, be happy to answer. And if not, then go back to sleep.
No, why don't we go ahead and open it up for a few questions for about 5 minutes, because I know you would like to go back to sleep, and we do.
That's all right.
We so appreciate you participating this evening. So any questions at this point?
I think it's super. Yeah, go ahead.
I'm sorry, I have a quick one. How do you deal with the title aspect of the property?
So that's a great question, Matthew. Through a traditional syndication, this was done on a Reg D 506C offering. So what we do is create an SPV, special purpose vehicle. I believe it was created in Delaware in this case, Aspen, and a company called Aspen Digital. And this company essentially bought 19% of the equity in the property. Now it can be done in two ways. You can either record the new SPV in the title, or you buy 90% of the equity in the management firm. In this case, I believe it was 90% equity in the management firm that was bought. So you technically don't even have to touch the title, right? So investors, of course, prefer for this new SPV to be recorded in the title. It's better for the investors. Sometimes it can be done. Most of the times you kind of don't want to touch the tax structure. In this case, also a REIT, real estate investment trust, was created for the tax purposes. So it's basically a single asset REIT that was created through which this property is managed essentially.
Matthew, if I could add a little bit, thank you, Yael. Sure. I appreciate that. We did some sessions, it's been about 2 or 3 years ago, where the title transfer involved a blockchain entry. And we were one of the first states in the nation to do that. Vermont was the very first. So
Proptech, right?
Proptech, yeah, right. And we had someone from Proptech, and the real estate firm, I think it was True Realty, that actually was involved in that transaction. Now, I don't think there's been a lot of traction since then, but
they did an NFT transfer now in Kiev about 2 months ago. Yeah. Okay. But in the US, it's complicated.
Yeah. So that's one of the areas of research that I think would be really interesting to pursue, that we'll talk about later on as an opportunity with the Applied Research Center's funding for blockchain. So I'll leave it at that. And any other questions? Maybe one more question before we turn it over.
So my desired topic of research, like if we were to do this, would be to examine the liquidity premium. And if it's something that, we don't have way too many use cases right now beyond the Aspen Coin, but they will be coming in the next year or two. I would love to look into this kind of perceived 20 to 30% liquidity premium. I wrote an article about that on PropMoto about a year ago, examining pre-tokenization use cases. So even when a property becomes a part of a public REIT, or a property becomes a part of a fund, there always seems to be a liquidity premium involved. So this specifically for me is the most interesting aspect to research, and something we could, in Solid Block, we could possibly apply to do.
Awesome. I think that's a great topic. And I'll just kind of do a sneak peek for the end piece, but on September 22nd, we're going to have another session like this, which will be an opportunity for the community to announce their interest in certain topics. And if they need additional team participants, like an academic institution or a principal investigator, that sort of thing, you can announce that on September the 22nd. And the opening for the applications, I'm told it will be September 25th through October 31st, and all applications that are made during that time period will be treated as applying at the same time. So that's a little sneak peek, and we definitely can follow up with this session with, you know, additional communications and community building.
All right.
So Yael, unless you have something else, we can say good night to you. Thank you so much for
Okay, bye guys.
participating, and we'll be in touch.
All right.
Okay,
Have a
thank
good
you.
day. Bye-bye.
All right, Ranga, I think you have joined. If you can.
Yes. Hi, Jay.
Hello, welcome. And you're joining us from San Francisco. If you would introduce yourself, your company, the area that you're exploring, and then you know, show us your presentation, that would be awesome.
Okay, great. Yeah, thank you, Jay, for setting this up and inviting me to speak here. I am an entrepreneur. Have a startup that called BEI.RE, BEI.RE, that started in 2019, and we're broadly focused on introducing blockchain into real estate, not so much from the tokenization perspective, but many of the other applications. And one of the initial areas we are looking at is applying it to commercial real estate data. So I will explain later some of the challenges associated with commercial real estate data and how we're trying to solve that. But besides that, I'm also the Bay Area Regional Chair for FIBREE, which is a nonprofit organization of people interested in the intersection of blockchain and real estate. And I'll talk a little bit about that. There is a working group in there that I chair on unique property ID. And so I'll be talking a little more about that as well. So that's a quick introduction. And I will start the, Jay, I should share the slides from here. Is that correct?
That's correct.
Okay.
Yep. You should have permission to share.
Okay. A second here.
It's the green button down at the bottom.
Yeah. Yeah. I just need to find here. There's it. Okay. So. Okay. Yeah. Okay. Is that coming through?
That looks good. Yes. You
Okay.
can go ahead and do the full present.
Yeah.
And it'll be full screen.
Yeah. You.
There we go. Thank you. Looks
Okay.
great.
Okay. So I wanted to touch on three things very quickly, more to give people a flavor of how blockchain is being applied in real estate in ways that are a little bit orthogonal, and maybe they will also connect up at some point with tokenization. But these are sort of other ways in which we are leveraging blockchain in real estate. I'll talk about the FIBREE Uoi Universal Object ID working group that we're doing, and talk about some of the work there. Then I'll say a little bit about what we're doing in my company BEI.RE, and then I'll talk about the RISO, which is the Real Estate Standards Organization in the US, has a similar thing to UOI called Unique Property ID, and those two are connected, but we're doing slightly different actual implementations regarding that. So I'll talk about that as well. So first about FIBREE. FIBREE is this foundation for international blockchain and real estate expertise. It tries to bring together people from real estate background, technology background, IT, and blockchain expertise to basically catalyze and bring blockchain into the many different applications in real estate. They annually publish a report surveying worldwide all of the activity in these areas. So if you go there, you can actually download it. It's a very well compiled report. I highly recommend it. And we also have working groups on various topics. And the working group that I chair is the UOI/UPI working group. And so what is UOI? It's the unique object ID. It was actually inspired by some earlier work on the UPI, which I'm going to talk about later, which was developed by Rizzo. And this was done with my co-chair of the working group, Joe Bronkers, who's based in the Netherlands. And they wanted to create an ID that would identify a subcomponent of a property. So if you look at on the left-hand side, if you think about the top level as the parcel ID, then you can have a group of buildings with a specific building, then perhaps some particular floor or other division in the building, and a particular apartment, the unit, and then a room in that apartment, and then a particular wall, and then a particular fixture, a window, or some other could be an electronic appliance or whatever on that wall, right? So they wanted to identify the components in a structure down to that detail, and wanted to create a unique ID for those. And so they created a corresponding scheme here, which is basically kind of hierarchical, builds on that flow that you saw going down from the parcel down to the individual part, right? So there's a specification on that. And the motivation is really that data in real estate is basically either not available, or if available, perhaps not current or reliable. And also, to the extent there are data aggregators in this business, they may aggregate the real estate data, leaving out control from the people who actually generated the data, and they themselves don't have access to it. So there are various challenges in real estate data. And the motivation for this UOI is, once you are able to tag this data with a unique object ID, you can then aggregate the different aspects. So if you think at the level of an apartment, if there could be a mortgage that's signed, there could be some renovation work that is done, but whatever it is, if they all get tagged to the unique ID of that apartment, then you can gather together all of that from different sources and have a unified picture, right? And that is really the idea, that the data as it is generated remains where it is. So no data aggregators, nobody trying to grab data from various places and try to sell them, but rather the data remains. If it's generated in a building, maybe there's a particular facility that manages that, and then at different levels the data is there. But then this provides a mechanism for data to be discovered, and then if the owner of the data provides permission, to have access to it. So that's kind of the vision behind UOI. And there have been some pilots done in Europe. I'm going to specifically talk about some of the work that's been done in the Netherlands by my partner there. You see on the top right, Joe Bronkers. And they have done this together with the Dutch government. So the Dutch government is quite involved in this. And they did 4 pilots. And one was in terms of maintaining the building renovation passport, the history of renovations, both past and future that are planned, material certificates about the materials that are used in any particular part of the building. Another having to do with maintaining documentation on quality assurance in the construction or sustained operation of buildings. And then the last is in terms of utility connections. And the way they brought this together is this: they said, okay, if we needed to install solar on either, you see on the left, a residential property, which is maybe a single family, or it could be a apartment complex that you see in the second situation, then how would we maintain each of these different kinds of data in regard to that? Because as you can imagine, as you can see, if you install that, it touches on all of these four things that I talked about. And how can those pieces of data get linked up and discovered and so on. So this is the pilot that they did. It was successful. And in fact, now they're looking at expanding even more. They have applied to a fairly large grant from the Dutch government. And they want to expand this further, right? So that's about Uoi. BEI.RE. So that's the startup I founded. And our sort of mission right now is to allow the quick discovery and private exchange of trustworthy data. So as you can see, this touches about the vision that I talked about with Uoi, right? But we are realizing this in a very specific context of commercial real estate, where data related to leasing is actually private information. How much rent is being paid, how many concessions are being given. All of this is something that is brokers exchange among themselves privately through ad hoc mechanisms, email, phone calls. And we want to provide a better platform where this information can be discovered easily and then privately shared between the parties through a digital mechanism, right? So that's what we are doing in applying this in commercial real estate. And in a few slides, I'll just show kind of the value prop for a commercial real estate broker today. They want to be up to date with transactions that are happening in their area. They want to advise their clients. They want to be able to negotiate their deals. And by the way, I am a commercial real estate broker in this area in the San Jose as well. And you will today, to get information that a deal happened nearby, it might be 2 weeks, a few weeks before you learn about it. Whereas if you knew that deal got closed today, you might be able to talk to that broker and get that information, and it could be something that's relevant to what you're doing with your client today in negotiating another transaction. So we want to be able to provide that real-time alert about lease transactions that are happening in your area. And so the broker can set up a filter saying, what type, whether, they want certain submarkets, a certain range of square feet, et cetera, filter that will filter and notify them only of, those transactions of interest. Once they set it up, once a lease deal is signed, we sort of get a notification of that without necessarily all the financial private information related to that, but just you see just those 4 fields over there, what type of property it is. It's an office. What is its size? It's 6474 square feet. What date was that transaction signed on? It was August 24th. And what type it is it new or renewal? So, and then the address. So just these fields, we get notification in our backend system, and we are able to alert on their mobiles, the brokers, that this has happened. So that is the service that we are rolling out here in the Silicon Valley area. And in the back of it, the sort of the next step after getting the notification is they could call up the broker, or what we have provided through our platform is they could actually request that electronically. And we want that response, if the person chooses to share that data, to actually come from the system of record. And that's where the blockchain plays a role in sort of providing that trust that the information you're receiving finally is actually correct. So that's where the blockchain comes into this whole picture. So that's about what we're doing at BEI.RE. And then the last one, tell you a little bit about REZO's UPI, the Universal Property Identifier. This is something that was defined a few years ago by the Real Estate Standards Organization. And the challenge that we have in real estate is that there are many IDs. So you can have CoreLogic, which is a major data provider. They have an ID for a property. There is a NAR. They have their own ID, and then so on. So, and then there is the plethora of these IDs. And the issue is that because these IDs are all distinct, even though they refer to the same property, all of the data connected with those IDs, doesn't get all aggregated. So we're trying to solve that problem of how to bring together all data. And so the UPI is a unique property ID that, one second, I thought I had put in, okay. So here it is. So here is the UPI, and it is hierarchical, starting with the country, and then the subcountry is usually the county in the US, for example, and there could be a sub-county level, and then the property type, and a local, property ID that has been provided. So you see some examples here, and some of you based in Arizona might recognize some of this FIPS ID that's up there. 04015 is for Maricopa County there, and then that 110 is the parcel ID. So you construct this UPI, which is then unique for every property, and that is connected to these other IDs, these CoreLogic ID or other IDs, and we have these resolvers that can map the UPI to these various other IDs, and a resolver can resolve a certain set of these other IDs, and some other resolver might do others, depending upon the data provider and what capability they have. And what problem that we have implemented is how to find the resolver that can answer your particular question. And what are those questions? One is, given a property related ID, you want to find the UPI for it. Or conversely, if you have the UPI, you want to find, say a CoreLogic ID corresponding to it. So if you're trying to solve one of these problems, you want to know who should I ask this question to, and CoreLogic might be running a resolver that could answer your question. And so then, what our service does is that points you to saying, okay, you wanted to solve this problem of mapping this ID to that one, go ask this particular resolver. So that's what a trusted resolver registry is. And we have built that. And so these are, for example, this shows you various different kinds of IDs. As I said, could be even postal address, and you see the multiple kinds of IDs related to the property. This resolver registry, which allows you to discover which resolver to ask this question to, is itself implemented using a distributed ledger. There are various advantages to it. In particular, each of these data providers, they value their service and don't want to necessarily provide their data to anybody else. So we kind of allow this distributed mechanism for all of this to work. So that's pretty much it. And maybe this was a little bit abstract, that's why I kept it to the last, but I'm happy to take some questions.
Okay, any questions for RANGA? All right, why don't we, we're going to have questions at the end.
I have a quick question.
Go ahead.
Yes.
Are you mapping both commercial and residential with that
UPI.
universal ID? Yeah.
Yes. This is for any property, right? So this is basically the most important thing here is the parcel number there. And then, if on that parcel there's more than one building, we can look at the sub building in there and so on. Yeah.
Nice. Okay. Thanks.
Yeah.
Okay, great. Thank you, RANGA. We can have more questions at the end as well.
Okay, thank you.
So if you will stop screen sharing,
Sure.
And I will turn it over to Eric Schedler. Eric, if you could introduce yourself and give us your presentation.
Hi, I'd be happy to. Just a moment here.
Click the present right next to share, just to the left of share.
Get there. Okay, I'll move this out of my way.
That'll all
There we
disappear
go.
when you
Okay.
click present.
Yay, thank you. Well, it's good to be with you, and thanks for sharing. Hold on, I gotta start at the beginning. And Jay mentioned I'm Eric SCHEDELER. I'm with Path Capital Advisors. I've been in the Valley since 1986. And you can look me up on LinkedIn, send me an invite, and I'd share my bio and be happy to discuss blockchain and real estate with you. Because I'm new to the conversation in the sense of I've primarily been in venture capital as an angel investor and a former investment banker, and I've been an issuer of securities with several public companies. So I'm basically here as a bridge to entrepreneurs and money and partners. But we start with the good news, right? But Bitcoin's back over $50,000. And the reason it's really good news is we wouldn't have the chance to meet if that had failed, right? So Bitcoin and blockchain are not synonymous. And for my non-technical friends, those people that I know that may be watching that are in real estate, that's an important distinction to know. So what we're looking for, at least as an investor, and some of the problems that I'm trying to solve, are the data-driven real estate blockchain. And what I'd like to open up is the possibilities of where can we automate discovery or make a permanent record that adds value to real estate. So this is kind of like the side chart, the periodic table of property and a transaction. And the reason I have it here is just to have an opportunity for developers and entrepreneurs and thought leaders to just begin to look at what can we do around property or ownership, and mortgages and transactions, foreclosures, boundaries, valuations, so that we make better choices, not only in buying and selling real estate, but also in how we handle some of the transactions. But what matters most to me is that our needs are met and that we trust. And when people talk to me about blockchain, this is kind of the essence of what I'm looking for. I want to know what the data-driven approach is. And is it in real-time data or historical granular property or other information? And I'm really excited about blockchain and AI as well. The next focus is I want to know, how does a smart contract work? And does a smart contract, for those that don't know, is it a code running on top of a blockchain that contains a set of rules under which the parties mutually agree and eliminates the need for third parties? And that's important to me because I look at some of the use cases, and if there was a new lease or something that could be triggered that was automated, one use case is for cars, for example. You don't pay the lease, you can get the vehicle. You don't have all of the steps in car recovery, or in managing your property in real estate. But I think the other thing, back to the data-driven, from a consumer and a real estate perspective, and I'm talking single-family homes type real estate, is that we really would, we're kind of looking for that Carfax. Now we have the inspection process, but I heard and I actually read an article the other day that the average time in Denver for someone to spend in a house and make an offer was around 17 minutes. And that there's a big pushback among millennial buyers that they're not that satisfied with their purchases. So we'd like to fix that. So either on the historical side or on the predictive side, it's an area of interest to me. And then the third area is in tokenization. I've always been in securities and stocks, and I love the liquidity that could be the possibility for real estate. And we heard from YAML earlier on how they tokenized that hotel in Aspen, the St. Regis, and it was really seminal work. Being from the securities industry in prior lives, that lack of liquidity has kind of turned me off of being a real estate investor until now. Now that I'm older, I'm looking for income. So wouldn't it be great to have a token that would make automated distributions and bring that trust back that I know From Wall Street, I might get it quarterly, I might get it semi-annually, but heck, with automated distributions and tokenization, I could get those payments faster. And it allows me to transfer wealth that I didn't have the opportunity to do before. Let's face it, real estate is hard to invest in, and it's a very rich and big builder of wealth, but it requires the ability during this major transformation of wealth to allow people to make a small investment. Because there is a trend, in Phoenix it's a leader, and I don't know if the community is familiar with them, but I just wanted to introduce, because we're in a red hot market, right? So there's a lot of interest on how do we make things simpler. But Phoenix is really great, not only in its weather, its appetite, its inclusion, but that we also are leading in a new market segment called build to rent. And if you're not familiar with the concept, it is basically full communities are being built with full amenities, much like a large apartment complex, only they're single family homes. And they're totally only for rent. And this is probably one of the examples you can see on the right of the screen of the different types of segments that are in the build to rent community. Why I'm saying that this is of importance is because we are known for not only being innovative in real estate, but we have the ability to deploy new technologies to test and to create and connect builders, not only with blockchain and technology solutions, but also with the built world. So I just put that as a placeholder. And if you're in commercial real estate or single family homes, and I think that's almost like 20% now, purchases are for investors. So I thought it was important to note that we're a real hotbed for that. So with that, what are some of the opportunities and possibilities? So what we're asking for is, if you think back to ways that we can enhance that experience, ways that we can add value to real estate, rather than we're familiar with that it's an asset class that's exciting, but now we have the opportunity to add more value than other places by adding technology and possibilities there. So we're asking to take a real focus area of adopting a blockchain segment out of that those various areas. First, what we'd like to do is help you with connect with a partner and decide, do you build it or do you partner? And then do you explore or decide on some of the collaboration opportunities, then determine the needs to facilitate the implementation and launch. So to support you in that, we have prepared a real estate blockchain digital directory that'll be launched publicly on the Path website, and it's available free to the community, whoever would like to distribute it also. But to start getting familiar with people in the community, other areas, the FIBREE organization and others that are developing applications in the blockchain area. So this is available now for citizens of the community, and it'll be several weeks before it's available to the general public. But what is available to everyone now is Jay can send out a link, is relevant industry resources. Because oftentimes people are saying, hey, I got an idea. Who else is doing it? What resources am I going to need? How can I tell if this will work? What are people saying about? So we've loaded in, if you will, in our resources page that the link is available. As I mentioned, the FIBREE industry report, that's a couple 100-page report, but you can view it, you can download it, you can comment on it, see, let the community know resources that you found that were of interest. We have another one, the blockchain technology and applications across multiple domains survey. And this is some of the work that's more academic community has provided. And, we're kind of seeking and calling forward for that community to come. And I think BRE also has an initiative in that arena to develop application areas that are being developed or not. But one of the aspects that I found that was really a good one was the Deloitte blockchain and commercial real estate. The future is here. And in that one, there actually is a use case in commercial real estate that allows you to kind of visualize how it might work. So I highly recommend that. Cutting through these, the Oxford Future of the Real Estate Initiative, the Future of Real Estate Tokenization, 61 pages. And if you want to go back to the original, for people who aren't familiar, is the peer-to-peer electronic cash system by Satoshi Nakamoto and the Bitcoin papers. Obviously, you can see the Aspen Coin case study that Solid Block did, or I posted the John Burns JBREC first published December 15, 2008, Unlocking the Housing Market Recovery. Now, why would I go back and do that? Well, for some of us, that period in the housing industry was very difficult. The beauty of that report, if you're an investor in real estate or you're developing for real estate, is it was actually a pleasant reminder that we actually did take action. We knew what was going on. And those solutions, following the right data and the right resources, were well ahead of the market. So we offer those. So that's, in a nutshell, feel free to have those available and enjoy. The last portion is just basically there's been changes in the crowdfunding laws in April. And the regulatory framework now involved in 3 areas. Reg CF, which is the crowdfunding as part of the Jobs Act. And I was back involved in, you may or may not be aware that the gentleman that kind of marshaled that whole effort for Thunderbird graduates, but it's now changed and it's increased to up to $5 million per raise. And it was previously $1 million or $1.7 million, 0.07. So the crowdfunding portal facilitates what we'll call a light registration. That's not the legal term. But then that moves us to Reg A+. And those are deemed mini IPOs, and they were also created in the Jobs Act. And the offerings are subject to SEC review and have periodic financial filings. And then the third area is Reg D, which is the most commonly used. But back to Reg A, because I did forget to mention that the increase in Reg A plus is now 75 million in the 12-month period, which was previously 50 million. So there's a lot to securities regulation, and I really, advise you to seek counsel in those areas. But those are now opportunities that have changed just since April, and those are kind of on the pathway, and that's kind of the area that we want to help provide, is navigating those financial areas if you're interested in going from raising funds or through tokenization, that process. It is a stair-step approach that we can help you with. And with that, I think that's it.
Excellent. Thank you, Eric.
Yeah.
If you'll stop screen sharing. And we'll open it up for questions in just a moment, but I would like to tag on to some of the topics that Eric touched upon, which is basically connecting with others in the community. And, we had some conversation earlier about this Arizona Blockchain Applied Research Center's funding opportunity. And I'm going to refer you to our last session last month, where we had folks from the Arizona Commerce Authority on this same format, and they went through in detail what the opportunities are for the 2.5 million in matching funds for blockchain, and then 2.5 million and matching funds for wearables. And there's an additional 500,000 that's still available from the 2019 program. So AJ Gilman is on the call on this session, and he has looked at this. He's an attorney who has looked at the Applied Research Centers and Institutes program. And before I turn it over to AJ to answer some questions and so forth, I do want to share my screen for just a moment and show you some follow-up opportunities here that we're going to be having. We're going to have an open house on every Saturday from basically 11 a.m. till 2 p.m. and you can sign up on Meetup. And this is an opportunity for you to come together with other folks in the community, find others that are interested in applying for this program, form teams, create applications, and then the next opportunity is, sorry, this is our past session, by the way. Well, so I'll just leave it at this, but on September 22nd, we'll have another session like the one tonight where teams that have formed, partial teams and so forth, can present what they're interested in, what they need in addition, and that'll be an opportunity to form a team, form a complete team, and then apply during the application window, which will be September 25th to October 31st. So I am going to wrap up my comments for the moment, and I'll turn it over to AJ Gilman. If you have any questions about the Arizona Blockchain Applied Research Centers program, AJ can answer those. And anything you would like to say in addition, AJ?
Hi, I'm AJ. Pleasure to be here. For anyone who has met me, hi again. Yeah, I'm just here to help answer any questions you might have on eligibility requirements, how to apply, the application period, which actually isn't open yet, but will be opening late next month for approximately a month, a little bit more actually. So we have about, looks like 3 minutes or so. If anyone has any questions, feel free to ask.
Great. So let's open it up for general questions for the panelists or others. Any questions? And there was a question in the chat on the live stream. Adam Matar, and we've had participation, by the way, from Chile, Bangkok, Thailand, all over the world. So there was a question: how is cash flow distributed on the tokenization? Ranga, would you like to take that?
Yeah, well, I don't think I'm necessarily the expert on this. I think the mechanisms, I guess it would depend upon the implementation. I guess one way it can happen is if the cash flow is actually converted to a cryptocurrency, in which case I think it becomes it can be more automated if that is done. And in the case where I guess if it needs to be actually dollars that are credited, it probably needs some sophisticated smart contract that interfaces to banking, to the actual banking system. But yeah, a smart contract in principle can do all of this. It can divvy up the incoming flows based on the current listed shares that people have. It can do all of that, but it would need potentially API calls into the banking system, which the banks would have to permit. So that's how.
Cool. Excellent. Well, we are at the end of our time this evening. I appreciate everybody's participation. This was recorded on YouTube, and it will be edited down. You'll find about an hour and a half of dead time before the actual presentation. I'll edit that down tomorrow. But stay tuned for the Saturday sessions where we'll have those live streamed as well. You can find out other folks that are interested in participating, and you can join those either virtually or in person at the Desert Blockchain Camp at about 27th Avenue in Camelback near Grand Canyon University. And we will be providing pizza at noon. So there's a little incentive. But anyway, thank you so much. Yeah, go ahead.
Can I ask one question to AJ,
Sure.
if he's still there, very quick? So I saw that in the requirement for this application, for the ARC application, there's a matching funds requirement that, so could you just explain that and have you given any thought like to some of these maybe just starting out projects, how they would, meet that requirement?
Okay, so the matching funds requirement actually, so at its core, the matching funds requirement means that if you are asking for an amount of money from one of the two grants, which is the one that's not open, which is the 5 million split up between blockchain and wearables evenly, and the remaining 500,000 for blockchain, that is first come, first serve, you must provide your own money up to the amount you're asking for. However, for the initial 500,000, that is the first come, first serve, that isn't just how much you're asking for. The tranches for that is 250,000. So that 500,000 is split evenly into two tranches, and you must come up with 250,000 to ask for any amount of money from one of those tranches. So if you want $10, you'll need to come up with $250,000 of your own money. That is not true of the matching funds. For the 5 million, you must come up with funds that is equal to or greater than the amount of money you're asking for, which makes it, and with regard to smaller businesses and startups, that's why I think this new ARC funding is much more appealing. It's a lot easier to, fund, to get access to, especially if you aren't sitting on a lot of money.
Mhm.
Yeah, and it's important to note that this is designed to have a collaboration among a spectrum of entities and participants. It's not designed to be like a grant for, a single entity, single individual or whatever.
Mhm.
So that's one of the reasons that we're having these events for the next month and a half to actually 2 months to bring the community together and for people to connect with one another, find out who do they need as part of the group so they can, submit a qualified application. So
In fact, that is a requirement. The fifth requirement for eligibility is that you must provide evidence of collaboration with universities, nonprofit business associations, health science research centers, institutes, or other technology businesses that do business within the state. So you must collaborate, in fact, to be eligible.
Yeah. So, all right. Well, thank you so much.
All right, thank you.
The presentation will be available to the public by tomorrow morning, if not sooner, and sign up for upcoming events so we can continue this conversation and create some funded opportunities for applied research, which is different than theoretical research. It's actually, the intention is to actually have a product that comes out the other end. So anyway, thank you very much. And please contact me, Jay Carpenter, at desertblockchain.com if you have any questions. Have a good evening.
Thank you much, Jay.
Thank you.